Good morning, everybody. I want to welcome you to this episode of Agent Growth Collective, quick little training series. And today I want to tell you a little story about my Uncle Irv. All right, so Uncle Irv, what we're talking about when we mention Uncle Irv is we are talking about cap rate, right? Capitalization rate. And more specifically, this is going to focus towards multifamily investment properties. That's typically where you're going to run into cap rate more so than other types of properties. Sure, you still run across it with other types of commercial properties and whatnot, but what's more prevalent with multifamily? So when an investor is looking at purchasing a multifamily property, there's several different ways that they may analyze a property, especially just initially. Okay. Now, every investor is going to have their own style, their own way they like to kind of screen properties, if you will, whether they're using a gross rent multiplier, they're using a cost per door, they're using cap rate, right? Then there's several other methods as well as the 1% rule, for example, and so on and so forth. But today we're going to kind of focus our efforts on cap rate, okay? And that's where Uncle Irv comes into play. So I'm going to show you a really simple way to understand capitalization rate, and hopefully it's a way that you can remember because it's Uncle Irv. How can you forget Uncle Irv? Let's get started. If I draw a triangle up here, okay? Up top here, we're going to put I, bottom left corner, we're going to put the R, bottom right, we're going to put the V. So there's Uncle Irv, right? IRV. There's Irv for us. Now, if we look at this bottom axis here, and we think of that as kind of like a seesaw, if you will, right? So we need a pivot point. So I'm going to put an X there for our pivot point. Okay, that's going to be a multiplication. Then all we need on the vertical axis is our division sign. So that right there is our formula for calculating capitalization rate. So income, which is net operating income, it's not gross operating income, it's not off of a pro forma, it is truly net operating income, divided by capitalization rate equals the value. The income, net operating income, divided by the value will give you your capitalization rate. If you have your capitalization rate and your value, but you have no idea how much NOI the property is generating, that's okay. You can calculate it. Capitalization rate times your value gives you your NOI. So that's the basic formula we're going to work off of. Okay. So let's say, for example, we have a property that has an NOI of 200,000. And we know that for the particular area that the property is in, the capitalization rate is, say, 6%. That means we have a 6% cap rate. That means the value of this property is approximately $3.33 million. Okay. So I did our NOI divided by our cap rate gives me my value. Another one might be they're telling us that the property has a 7% cap rate. And let's say they're asking, I don't know, $800,000 for the property. All right. So if that's the information that we know, we come over here, we get our calculator, $800,000, excuse me, times 7%, and that gives us an NOI of $56,000. So now from there, as an investor, you can take it further. You can look at what is my cash on cash return going to be? What is my annual return going to be? What is my debt service coverage ratio going to be? Okay, DSCR. I'll cover that in another video for you. So you see how this kind of works. It is, as long as you have two pieces of information, you can complete the puzzle. Okay. Now, the interesting thing I'll bring your attention to here with this axis, with the multiplication here, and I told you this kind of acts like a seesaw, right? as your cap rate goes down, your value goes up and vice versa. Okay. So in theory, you want to buy a property that has a high cap rate because the value would be low, the purchase price. And then you want to improve the property, evening out that seesaw, and then sell at a low cap rate at a high sales price. Hope that makes sense to you. Hope you find that helpful. Thanks for watching. As always, make sure you click that like and subscribe button. That way you never miss any content that we deliver for you. Put in the comments any subjects that you'd like me to expand on. I'd be happy to deliver that for you.